here we are in another edition of our weekly recap with Defiant Print Team. Welcome, everyone. Thanks for joining us. Here we are with Owen and Alex, our reporters, and YYC Trader, our head of news, and I'm Cami Russo, the founder of the Defiant. It's been another eventful week in crypto and DeFi. Biggest news as we've had, I think, for the past few weeks is regulatory news with Coinbase receiving a Wells notice that signals the biggest exchange in the US may be getting a lawsuit from the securities regulator. Then other big headline was Arbitrum airdropping its ARB tokens and all the craziness that ensued. And markets were really eventful this week as well, with a Fed rate decision which cut what had been a rally in crypto, cut it short, along with other risk assets. So let's get to the biggest story of the week, Coinbase. Alex, you wrote the story for this one. So why don't you just give us a breakdown of what happened?
Sure. So Wednesday night, Coinbase said that it had received a Wells notice from the Securities and Exchange Commission. A Wells notice is not a lawsuit. No charges have formally been made, but it's basically a letter to a company, in this case Coinbase, saying, our staff thinks that you're breaking the law. We're probably going to sue you, but we're giving you some time to tell us why you're not breaking the law, to kind of change our minds. So everybody expects this to end up with a lawsuit from the SEC. The question is what exactly the SEC is alleging, right? So Coinbase executives said that the SEC seems to have issues with its asset listing policies, with its staking service, with Coinbase Wallet, one or two other things that I can't recall off the top of my head. But the list is basically your entire business model. And it seems like I spoke to a former SEC attorney who is of the opinion that, depending on what exactly the SEC alleges and the specifics of the lawsuit, this could be the defining case for crypto. Because, I mean, recall that the crypto industry has been asking for regulation. It wants to know what the rules are so that it's easier to build, so that people who are in the industry know that what they're working on today won't be illegal tomorrow. And rather than legislation that is specifically tailored to blockchain technology, rather than even just like a little guidebook where the SEC says, hey, this is exactly what we think about cryptocurrency and what's within bounds and what's outside, it's been kind of making its opinion known piecemeal through, a lawsuit here, a lawsuit there. And if the SEC files a lawsuit that says, we think everything on your platform that people can buy and sell is a security, then and if Coinbase takes it all the way, right? Like if they don't choose to settle the way Kraken did with its staking service earlier this year, a decision there could settle a question, right? Like, are crypto tokens securities that are subject to very strict oversight from the SEC, oversight that's expensive enough that it probably means most projects are dead in the crib? Or does it mean that crypto tokens are something else, maybe commodities, maybe their own class of financial assets?
Yeah. I just hopped on a space with Brian Armstrong today, and yeah, they seem ready to take it to the mat, so to speak, and go all the way with the legal proceedings. And it will be it will be very interesting to see the space maybe actually achieve clarity. And it's interesting that they're kind of positioning themselves. I noticed that they're kind of positioning themselves instead of as kind of within as a source of job growth, as in America, as like a pro-American industry, or at least one that can like foster growth in America. And also they kind of specifically targeted the SEC as being kind of almost like a rogue institution. And I'm working on a story on that right now, but saying that other, yeah, like that stands out as being like the most kind of antagonistic of all kind of the regulators and lawmakers they've worked with. So it's interesting to watch Coinbase's legal strategy and communication strategy emerge around this, and it's going to be so high profile that yeah, it's fun to watch.
Yeah, and to be clear, any like if clarity does come out of this, it won't be for years. These things take a while to make their way through the process, right? So like this year, we're gonna get a decision on the Ripple versus SEC case. That's where the SEC sued Ripple, alleging that XRP is a security, and that's like that's been the big one. Coinbase now seems like it's going to be the bigger one, but this one will give some clarity. But I don't know. I'm not a legal expert. I don't even know if this opinion is predominant among legal experts, but I could see a decision in that case where we get clarity when it comes to XRP, but like not a whole lot else. So it's still going to be like a long time before the industry, assuming that Congress doesn't step in, which they don't seem inclined to do. It's going to be a long time before the industry still knows exactly what's kosher and what isn't.
Fair enough.
I think what's also worth highlighting in this case is how much Coinbase has been trying to play by the rules. This is not a case where it's a crypto company in the Wild West, purposely trying to skirt regulators. No, like they've been actively kind of engaging with the SEC, trying to get guidance. Coinbase is a publicly listed company, so they've had to file, all these disclosures with the SEC, and so they've really tried to get guidance on their staking products, on the securities that they trade, and according to Coinbase, they haven't gotten an answer, except for this kind of wealth notice, which tells them, no, you're doing something wrong, but the SEC isn't telling them exactly what they're doing wrong. And it's like they're not answering to Coinbase's kind of good faith attempts to play by the rules. They're just going straight to attack them without even clarifying what it is that they should have been doing. So it's really hard to understand what the strategy is here. From
at least as Coinbase, Coinbase says we've been acting in good faith. Like,
yeah,
I don't trust anybody.
It's true. It's true. This is taking Coinbase at kind of their word. So, we should obviously take it with a grain of salt, but it's still there might be some truth there. Just seeing how the SEC has acted with crypto in the past, which is just like not giving any clarity at all.
Sorry, go ahead.
No, it's we've kind of covered this before, how hard it is to actually register. And Paradigm yesterday, I think one of you guys shared it, had a really interesting blog post saying that it's not it's not a viable strategy for crypto projects to register with U.S. regulators, because Gary Gensler makes it seem like it's filling out a form in the SEC website, and it looks like it's far from true. That it's really a complicated, lengthy, expensive process. That it's not like crypto just refuses to comply with. It's just that it hasn't been able to. I don't know. That's kind of Paradigm's argument.
Have you had an opportunity to go through Paradigm's argument? Because I'm curious whether it's just like the usual industry thing, like, well, we don't want to go through the process, so we're going to say, well, it's really long, it's really expensive, it's really hard, but the rest of the financial world has been grudgingly doing that this whole time, as opposed to no, we actually like literally can't. Like,
their argument is that crypto literally cannot register according to the documents that they would have to. Like, I think it's like Form S1, and their argument is that because of how crypto is structured, that there are some questions there that projects, protocols can't answer. Like, I would imagine it has to do with information about customers, stuff like that, where kind of being a non-custodial protocol, you can't do that. But in any case, that could be a good project for you guys to take on, like maybe report on how easy or how hard it is to actually fill out these documents.
I'm going to start an Alex token, and
Okay.
I'm going to try to register with the SEC. I'll let you know how it goes.
Could be a nice like first person journalism account. I think we should actually do it. But let's try and see
I've
for
got
ourselves.
lawyer friends.
Yeah. I think it'll be good kind of citizen journalism style.
Yeah.
So, anyways, that's Paradigm's argument, that it's just, beside it being hard and cumbersome and expensive, crypto companies aren't able to actually comply because of what it's asking.
Right.
So, anyways, we're continue to see this crackdown on crypto by U.S. regulators. This time, it appears to be towards the biggest exchange in the U.S. So, as we reported in the story, it could be the defining case of the crypto era. As Alex said, those definitions won't come for years because this stuff takes a long time. But being Coinbase, and kind of speculating really about what might be covered, which is whether all these digital assets that are being traded on Coinbase, whether these assets are securities, whether staking as a service is similar to a securities offering. All of those questions are really key and core to crypto. So
yeah, and this actually wasn't the only SEC news Wednesday. It overshadowed news that came out of the SEC itself. The SEC had announced that it was going after Justin Sun, who founded the Tron blockchain.
Oh, and I thought you were talking about the Sushi news, but yeah, lots of news
Yeah.
to see. Yeah, Justin Sun. Yeah,
and like it also went after a couple of famous, like Soldier Boy, Lindsay Lohan, Lil Yachty, I think, because Sun had paid them to shill
all of these guys.
what token was it? TRX. That's not as big of a deal. We've seen a couple of these so far. You'll recall that Kim Kardashian got slapped with a big fine from the SEC. They made similar allegations against Do Kwon, if I'm not mistaken. But yeah, you wanted to talk about Sushi. That was another.
Yeah. So just to clarify, the action against Justin Sun was because he was promoting TRX without disclosing that he was being paid, or
TRX and BTT, this BitTorrent token for anybody who, back in the day had to download their music illegally. You might remember BitTorrent. That those tokens are under unregistered securities, so that he was listing and selling unregistered securities. So that's the allegation that we've seen a bunch of times now against crypto people this year. But then separately, that he engaged in extensive wash trading. So he was manipulating the market for those tokens by basically trading them back and forth between himself, so that it looked like there was a lot of activity and natural adoption there, when in fact there was not. And then separately going after these influencers that he was tied to because they violated the law. If they're going to shill somebody's security, they have to disclose that they've been paid to do so, which they didn't. You're muted.
Yeah, so we've seen this kind of case a few times. But yeah, this Sushi one is a bit more interesting.
Yeah. And we actually don't know a whole lot about it. We just know that Sushi received a subpoena from the SEC. So the SEC wants something from Sushi. It wants some kind of information. What that information is, we don't know. I reached out to Jared Gray, who's the CEO of the DAO, which is an oxymoron that I haven't quite managed to get my head around just yet. Nevertheless, he got back to me and basically said, look, I can't tell you anything more than I already said online. And all he said was, we got a subpoena. We need to set aside some money for upcoming legal costs. Yeah, I don't know if that means that they should expect some kind of a lawsuit, if the SEC thinks anything untoward has happened there. But it's interesting in part because Sushi is, again, nominally a DAO. And so it raises the question of who exactly is going to be liable should Sushi be found in violation of presumably some kind of securities law, right?
Mm-hmm. Right. So yeah, we don't know much about this. It's interesting that this whole discussion was being held in the public forum, the governance forum for Sushi, where Jared Gray was asking for this fund to cover legal expenses. So I think what he was looking for, $3 million to cover legal expenses, and then to be able to top that off if they run out. So obviously, he's expecting some legal action against Sushi, and we don't know exactly what that is. It's interesting that legal action would be against a DAO. Sushi is a decentralized organization. It has distributed contributors globally, lots of anonymous contributors. I'm not sure if it has some registered entity. I think you reported that it does, right?
Yeah, so it just created 3 entities, two in Panama, I think, and then one.
3 entities in Panama and one in the Cayman Islands.
Right, and it did that because it wanted to reduce its legal liability. It was worried that being completely unregistered, just being a motley collection of developers scattered around the world, if that's in fact how it was running, exposed all of them to I don't know, some kind of it made them vulnerable legally in some way. So the idea here, I think, was to avoid exactly what seems to be coming from the SEC.
Right. And then Eric Voorhees said, if there's an entity, it's not a DAO. So he said, don't let lawyers talk you into incorporation unless you want to be a corporation. But it's unclear whether not incorporating will actually protect DAOs. We saw last year this really interesting Uki DAO, formerly known as BCX DAO, and how the CFTC fined Uki DAO even if they had no incorporated entity. So, this whole idea that by being a DAO fully online, without any kind of physical presence or incorporation, whether that will actually be a sure way to protect members from legal action. I think that's less clear after Uki DAO. So I don't know if Sushi could have avoided this at all.
Right.
Tough
week.
Tough week. And it doesn't end there. We had this report from the White House.
Right on. I can jump in. This was a Sam story, and I apologize, guys. I didn't sleep very well, so I may be dumb today. But that said, yes. So on, I believe it was Wednesday, there is an economic report which comes out annually from the Council of Economic Advisors. It was actually Monday, and basically it slammed cryptocurrencies broadly, both as a means of payment, a store of value, and yeah, I mean, it was yet another example of showing how far apart crypto proponents are from Washington. And yeah, I mean, crypto looks pretty bad given the past year. So I think maybe SBF has left a bad taste in everyone's mouth, especially considering how close he was with everyone else. I talked to some Christian Smith about that this week. But yeah, I mean, on the flip side, in terms of just like the amount of real estate this economic report dedicated to digital assets, it was pretty huge. I think it was like an eighth of the report, or it got its own chapter. I think Fred Esherim, co-founder of Coinbase, commented on that, saying, "Well, like you're at least like living, rent free in the Biden administration's head." So we'll have to see where it goes. I mean, from my brief reading of it, it seems like crypto was broadly panned, and the alleged advantages about kind of increasing financial inclusion and efficiency were basically disagreed with. And yeah, yet another sign of kind of this ongoing battle crypto appears to be gearing up for in Washington.
Yeah, it's really a shame that these analysts in Washington are seeing such a skewed, have such a skewed view of crypto, seeing like just the negatives that can come out of it and not all the positives. I think, it's undeniable that crypto is solving a problem that couldn't be solved before. It's real innovation. It's the ability to transact without intermediaries globally. And I think it's at least demonstrated that's the case. Of course, in the same way that there's speculation in traditional markets, people will speculate with money. It's what happens. Like you want to invest, you want to bet if something will gain in value, and that will happen with penny stocks, and it will happen with shitcoins. But it's not the nature of like crypto that makes that happen. It's human nature that makes that happen. I mean, you can't stop that. So I think it's a very, very narrow view of what crypto can do.
Yeah.
And then you also reported, Owen, on crypto companies being debanked. This was, I think, a blockchain association report.
Yeah. So Alex reported on that initially last week, and this was a follow-up where I got a hold of Christian Smith, who is the CEO of the Blockchain Association, which is a major trade association for crypto and pushes pro policy in Washington. So they kind of made a slight departure from their normal approach, which is usually debating about documents in the public. But last week they actually made a call for
I think, did we lose Owen?
I think we lost Owen.
Oh no.
I mean, I can just pick it up real quick
Yeah.
while we wait for Owen to join us again.
Mhm.
But yeah, the Blockchain Association asked, it's the big narrative to kick off 2023 has been that crypto in the US is suffering from a Operation Choke Point 2.0, right? The idea that the Biden administration is trying to completely sever it from traditional financial markets, but that's a theory with a lot of anecdotal evidence, but no actual hard proof. And the Blockchain Association is looking for that proof. I'm not going to hand this over to Owen, who can take it from there.
Thanks, man. I'm telling you guys, I was so eloquent while I was kicked offline. You really missed out.
For sure.
But anyways, so I'm not sure what everyone heard last, but yeah, I caught up with Christian Smith, and she noted that they typically operate in public, in that they're dealing with like public documents and making statements about potential legislation, whereas now they're changing their tack a bit and looking of being debanked and kind of in a more closed way, kind of internalizing a lot of, I think, emails from people who may have been debanked to try to kind of understand where that. I mean, I think Alex was speaking to this. There's this feeling that crypto is that there may be some kind of coordinated attack on crypto companies and denying them banking services. And I mean, the question is I think the most interesting question in crypto right now is like whether that is happening and what is the nature of that, like, quote unquote Operation Choke Point, or even more broadly operation, just like the anti-crypto operation, which could include the SEC, like what is motivating that, and just like the specifics of the nature of that kind of anti-crypto sentiment coming out of various governmental agencies. So yeah, I mean, it's interesting, and she wasn't, and no one is quite willing to no one's willing to say it's a conspiracy. I mean, Christian's big idea was that she felt like this backlash, which does seem coordinated, is more about SBF than it was about like some attempt to stop crypto from like revamping or taking over the financial system. So, yeah, she wasn't willing to say. I kind of say it was like some crazy conspiracy, which she was not ready to do, to her credit. But yeah, I mean, this was just another instance of her. But she said they're kind of putting together some interesting companies and anecdotes of companies that have been debanked. So they're trying to, I think, figure out how to go public and like tell a certain story about crypto. So they're still in the information gathering stages, as well as just trying to go ahead.
Yeah, no, I can't wait to see that report. I think the idea is that everyone has heard anecdotal evidence about crypto being debanked, so it's good to have actual examples, like actual data, numbers behind that general sentiment. And interesting that she didn't say that this is kind of a coordinated effort from U.S. regulators to kind of crack down on crypto or debank crypto.
It might be a coordinated effort. I think she didn't rule out a coordinated effort, but she didn't say that it was a coordinated effort in order to like prevent crypto from succeeding so much as to like distance itself from maybe the kind of bad sheen of crypto, especially the bad sheen of SBF. You know, like I think there's this undercurrent going on in crypto where it's like, this is this revolutionary financial system, like this is this battle, and you know the powers that be want to maintain the status quo. So she wasn't willing to say that, but I think she would be okay with saying it's possible there's some kind of conspiracy to kind of distance itself from SBF and all the kind of, you know, arguably gross or kind of like things that did really hurt retail traders in the last year.
Yeah, I think for what it's worth, the idea that, you know, the powers that be, the politicians, are terrified of crypto and the freedom and financial revolution that it's going to unlock. You know, even like people who work with the politicians who've spoken to me on background, you know, like when they put their name to their words, right? If you got to work with these politicians and these regulators, you're not going to want to talk smack about them, right? But
Sure.
you know, even when we're kind of just talking off the record about it, none of them actually think like they're scared of the revolution that's coming. You know, it's, you look back at one of the FTX hearings, and it makes more sense if you understand it through the lens of, I think it was a California congressman, his name is Brad Sherman, who is like crypto reminds me of the pet rock craze. You know, it's like when you think of the regulators and the administration thinking about crypto as essentially a pet rock that can like bring down the broader financial system if it's too tightly integrated, then what they're doing, however however unreasonable it is, however illegal it could possibly be, right? Because you can't like just debank a legal industry. It makes more sense in that light, and the people that I've spoken to all seem to think of it in that way, right? Because FTX happened, and politicians don't want, like, FTX was the industry in the minds of a lot of regular people, right? So like nobody wants to look like they're carrying water for FTX or for the, you know, the next FTX.
Yeah.
Whenever that happens, no regulator wants to look like, oh well, you know, we just let it happen. I mean, they effectively did with FTX, but you know, the next time this happens, it'll be really easy for somebody to point to a regulator and be like, so that happened, and then you just didn't do anything.
Yeah.
So it's like really you know, a lot of it is just motivated by the fact that like, look, like, thank goodness FTX didn't actually matter in the grand scheme of things the way Lehman Brothers mattered in 2008. We want to keep it that way. We want to keep it separate from the traditional financial world, because that's the one that matters.
Yeah.
You know, not the according to Brad Sherman, the pet rock money world.
Yeah.
And that's where I think they're coming from.
There's also, I think it's that, I think you're right that it's this view of cryptos is like joke a bit, or at least like this like playground like of people playing with funny money. But I think there's from what I've the idea that I've gotten also talking to people from Washington is, if there is some bigger fear of crypto, it's about the potential for Bitcoin or stable coins, or just more likely Bitcoin, to undermine the value of the dollar. That's kind of the other threat that Washington is seeing. And obviously, you know, it wants the US dollar to maintain its supremacy. And so the potential threat that they see in crypto and Bitcoin is, you know, what if people start selling dollars for Bitcoin? What if kind of other countries, you know, El Salvador was one example, but what if bigger countries choose to have Bitcoin as their reserve currency, and you know, and not borrowing dollars, and so that could be a potential like bigger threat. And I agree, it's not so much this kind of banking revolution that scares them, but what it means for the dollar.
And I mean, it's hard because there's so many players. Right? I mean, it's not one guy. I mean, Gary is one guy. The people on the Coinbase space yesterday were saying like these individual Congress people, they were making the argument that all these individual Congress people are just trying to get elected again. And so Coinbase is making the push for people to like make their voices known for individual Congress people who may, listen to their constituents.
We lost Owen again. He was on a roll. Oh my god.
He was. All right. Well, yeah.
Okay.
I guess I can pick that up again. Yeah, it's interesting. Like something that I kind of want to look into a little bit is the fact that this really seems like something that's set to catalyze a big industry response. Like it seems like there's a lot of talk about like, okay, like this is it, finally we're going to like really get organized, we're going to really let them know what we think, and because as cynical as people like to be about how politics works, politicians do actually respond to what their people want. It might be delayed, it might be like they care less about what the average person wants than their high dollar donor, but the fact of the matter is that like when they kind of get a feeling like, oh crap, like my constituents are going to be really pissed if I don't do X, they usually do it, right? So it's like if the industry can rustle up enough just enough people in enough districts across the country, that could actually change things. The question is really just, are there enough people who care, right? Like, can they mobilize that support? Because it's easy to feel that way when you're, for example, living in the crypto Twitter bubble, and like everybody that and the whole like online discourse is around this extra legal assault on a legal industry. But whether they can actually get enough people in all 400 whatever districts to call their representative in the House, like, hey, like that's a huge lift.
That was Go ahead, Cami. Or just one sentence, like like that was the nature of the Coinbase's space yesterday, is that push saying like, look, 50 million Americans own crypto, like you actually are a fairly large voting block. So it's
just like what makes it tough is just like, I know a lot of people who own crypto, even people who don't like crypto, who own crypto because they're back in like 2021, they're like, shit, I mean, I guess if it like might go to $1 million, I'll get a little bit of Bitcoin, right? So it's like there are a lot of people who own crypto and use crypto and believe in crypto, but there are probably a lot more who just happen to have a little bit in a wallet whose keys they may or may not still remember. And I wonder what the actual number is, the people for whom this, it's more than just I bought some back in the bull market and I kind of regret it now.
So I think, when regulators act, sometimes it does make sense. But just wanted to share this latest news about Do Kwon arrested in Montenegro. I think there was this footage of him being arrested that was just shared. So pretty kind of impressive to see this. Just like who used to be this rock star in crypto, this just like huge figure in this space, being shuttled into a police car. Crazy. I don't think anyone would have guessed the 2022 bull run would have ended this way.
Cami, I think you've interviewed 3 people who have at least been accused of a crime in the past 2 years.
Oh yeah, probably more than that. But we interviewed Do. We We had SBF on the podcast. Who else are you thinking of?
Nate.
Oh, you're right. Nate
Yeah.
was also in the podcast.
Yeah.
Wow. Yeah.
Who?
Nate from OpenSea.
Oh,
So I don't know what that says about the podcast, but
Oh, God.
gosh. Also Steve Nerayov, but that's from my book. He was also accused. Yeah. So I mean, I think we've all been kind of railing against regulators being unfair to crypto. There are instances where it does make sense. Obviously, I think there is space for regulation. I think what everyone's been asking for is not lack of regulation, but just clarity and a viable path to become regulated. I don't know. Like I'm still torn about the whole Terra thing. I think it's different from Celsius, from Three Arrows, where people didn't know what was happening with their money. I think in the case of Terra, yeah, it was like a badly designed protocol, sure, like badly designed stablecoin, but
but no one forced anyone to throw 40 billion at it.
Exactly.
Yeah.
but that's like why the SEC exists in the first place, right? The idea that some people just aren't savvy enough, like that people don't know what's good for themselves. I don't know. It's like nobody forced people to go into it, but like if you're just like a regular person, you're like, well, my savings account is getting 1% or whatever, and I want to make a little bit of money and buy a house one day, and like, oh, look at Terra. Like, I don't know, you can't blame anybody for not having like audited the code themselves and like realized, oh man, this algorithmic peg mechanism is just shaky.
I think what kind of made the problem worse than it was there were a bunch of like third parties who were taking money from people and putting it in Anchor behind the scenes and keeping a cut, right? So we saw a lot of them collapse after UST did, right? And those guys were straight up marketing their product as a savings product. So obviously, I think those companies need to be definitely taken and held accountable for because yes, for us who are in DeFi and we understand the mechanics, like a lot of people could see that it was Ponzi-esque, having been rugged by multiple algorithmic stablecoins over the last 2 years, right? It's just that it grew so big so quickly for various factors, including other protocols also piling on and enabling it. For example, the degen box strategy, right, that came out from Abracadabra. So you could leverage up UST to the gills and make 150% APR on a stablecoin. So, I mean, who wouldn't jump at that, right? So we had whales, dolphins, even small fish. Everyone was getting into these things at the time. So yeah, I don't think it's completely fair to blame the team completely. I mean, obviously, according to Fat Man, like they did a lot of shady stuff behind the scenes, right? But we can't confirm that yet. So I guess we'll have to wait and see how the court proceedings play out.
I'm curious. We don't know yet, like where he might get extradited to? Do we?
Batman. I messaged with Batman. He thought Korea would take precedence because, literally just because it was home country. But I don't know. I don't know how international law in that way works. Because 3 different legal been taken against him from 3 different countries. So I don't know.
The US, Korea, and Singapore.
Yeah.
I mean, I guess since the red notice was requested by the Korean authorities, and if he was arrested on the basis of that, then it would make sense that South Korea might get first dibs or something. I don't know.
It's a tour.
So
Wanted him first.
here it says he was charged with document forgery, so something completely different from anything related to Terra. Do you know
Yeah,
what-
he was just he was trying to leave the country with like a fake passport or something.
Yeah.
And
Crazy.
of course,
He's trying to go to Dubai.
right?
Yeah.
To join
It's the place
everyone
to be.
else. All the
Yeah.
crypto titans of industry are all hanging around there.
Yeah. Get lunch with the 3 Arrows guys.
That should make for interesting kind of, I don't know, conversation.
Yeah, right. Clinking glasses like they almost got us, but
Okay, let's change tack and talk markets because it was an eventful week. What was it? Do you want to take this one?
Sure. So we had the Fed decision this week on Wednesday, and this was one of the most widely anticipated ones. Not that the previous ones haven't been watched, but this one in particular, just because of the banking crisis or the bank failures that we had the week before. I think 2 of the 3 largest in U.S. history, if I remember correctly. So everyone was waiting to see if the Fed would kind of pause or come up with some sort of measures to kind of shore up the banking system, which they did. They've come up with this bank lending program that lets banks essentially borrow against their now devalued bonds at face value. So they don't need to actually realize the losses by selling them. They can just borrow against them and wait for the prices to recover, which sounds, a lot like a bailout, if you ask me. As a private investor, you'd never get a deal like that. Like, hey man, my portfolio is down. Can you, lend me at 2021 peak values? No chance, right? But yeah, this is the banking systems obviously too big to fail and all that. So in terms of crypto, not too much of a reaction as compared to previous hikes. Bitcoin and ETH were down about 4% on the decision, but then reversed all of that and more yesterday. And then today we've kind of fallen back in. So it's basically we've been consolidating the gains of the last 2 weeks, I'd say, because we had quite a substantial rally across crypto, right? Since I'd say the 10th of March.
So you're thinking crypto held up pretty well, considering?
Yeah, absolutely. I think a lot of people think that this is it in terms of hikes. So the FedWatch tool actually predicts right now an 88% chance of no hike at the May meeting. Right. So I guess a lot of people think that, yep, this is it. And that's a change from when the article came out, I guess, because people were still expecting 25 basis points, according to that screenshot. Is that it?
No, this is the actual watch.
Okay, so yeah, so people are looking for current rate 475 to 500. Yeah, so no change.
Oh, that's interesting. So
Yeah.
okay, so I guess like the market should hold up well if people think that this last 25 basis point hike was the last one.
Yes, and we have more than a month till the next meeting, right? May 3rd. So that's a lot of time for markets to. I mean, sure we could get another black swan out of nowhere, but more often than not, I think markets are just consolidating the gains that they've accrued over the last 2 weeks, and hopefully we see some more upside going forward.
That's good to hear. Why do you think like the trend for crypto has been up since the start of the year, and now with this, it seems like it might continue that way. What do you think is driving it?
The dollar has weakened. That's basically what I look at, especially in terms of pricing of risk assets, because everything's priced in dollars, right? So if we see, I'm just taking a quick look at the chart here. So the dollar was sitting at about 104, 105 when we started the year, and then we had it drop by around 3-4% into February. Right, so that I think fueled the initial boom, and of course the completion of tax selling and all that stuff. Right, so January is generally positive, but then we've seemed to have built some momentum, and especially Bitcoin in particular has got a bid on the back of these banking issues, right? Because I think its value as somewhat of a doomsday hedge has come back into the equation. And I think, Owen, you spoke to Deribit, right? And they had something similar to say, that open interest on Bitcoin is at an all-time high, at least on their platform. Deribit is the biggest option clearinghouse that we have in crypto.
Yeah.
So
Yeah.
I think that's played a factor as well. So altcoins haven't performed as well as Bitcoin, at least in this last rally that we've had this month. It's just been Bitcoin and, of course, Arbitrum related tokens that have done really well.
Oops, I have here this chart from CoinMarketCap that shows Bitcoin dominance. It's at 46%, and that's the highest since June of last year.
Yes, that was when Three Arrows collapsed, right? And within crypto, I mean, altcoins were just getting decimated, and everyone was fleeing to Bitcoin, which was also crashing, but not crashing as much.
Right.
So so I don't think we're seeing a similar sell-off in terms of other assets, but just that they aren't catching a bid. It's just been the Bitcoin story this month.
It's crazy how, because like usually these Bitcoiner narratives don't actually play out. Like we've seen, like we saw with inflation. Like if inflation is picking up, you expected Bitcoin to rise, but we didn't see that last year. And I remember kind of, there was this whole argument of, is Bitcoin actually an inflation hedge and so on. But in this case, with the banking crisis, this typical Bitcoin as a doomsday hedge actually did play out. It's interesting to see. Like I think it also came at a time it was banks failing, and also stable coins not failing, but there was kind of more risk associated with holding stable coins because they had fiat in these banks. So if you can't keep your fiat in the bank and you can't keep stable coins, then the next best thing is Bitcoin.
Yeah, I think it's the hard money characteristic definitely came to the forefront this month, because this was more of people worried about the US dollar collapsing and like hyperinflation and stuff, right? Which is why we saw that bet that
Right.
ran like wildfire.
Where is it? Here we go. We had a video on this. Crazy bet by Balaji saying that Bitcoin will be worth 1 million in 90 days. Basically, that the entire economic order will collapse in 90 days.
It was fun being at a wedding this past weekend. And, I just had like my go-to like dinner table conversation. I'm like, okay, so there's this guy named Balaji. He really likes Bitcoin. And yeah, people are just like, whoa, no way. Like,
there's this, whole debate on what his motivations are. Like, does he actually think this? Is he doing this because he's like pumping his own Bitcoin bags? Is he doing it for publicity?
he's been explicit that he doesn't actually think he's going to win the bet. He's like trying to like
sound the alarm.
Sound
right?
the alarm. Yeah, he called himself like the these aren't his exact words, but like the financial market Paul Revere, right? Like riding through the metaverse, like telling people like quick, like dump your dollars, get Bitcoin before it all goes to hell.
He did get his like coronavirus call right. So he was like sounding the alarm on COVID way before everything went down. So he does have that to his kind of credit.
Something that, just like on the topic of like Bitcoin's rally, that I thought was interesting. I read this earlier this week. It was actually in a Wall Street Journal story about the rally. It notes that Bitcoin's rally has been driven by a small number of wealthy crypto investors. On Monday, the number of Bitcoin buyers and sellers was near its lowest point since the summer of 2022, according to one data firm that did this analysis. And according to that analyst, these investors bought Bitcoin on hopes that the Fed may slow its pace of interest rate increases, thus benefiting Bitcoin.
Yeah.
So yeah, that's just interesting, that like apparently a couple of whales have been able to push the price up so much lately.
Yeah, that would line up with the conversation with Dare a bit too, like because they only have like a couple thousand customers, but that accounts for like 90% of the open interest for options. So I mean, just likewise, like that there was a spike there, I think maybe means this is like a somewhat institutionally driven rally for Bitcoin, which is interesting.
It is, and it makes sense because it's not like we're seeing this kind of wave of newbies come in.
Yeah.
Right? It's kind of a different sort of rally.
Yeah, totally.
Okay, and then we're running out of time, so want to get to, I think what will be our final big headline of the week, which was the Arbitrum airdrop happened. No, where is this story? No, that's not it. This one. Yeah, it happened yesterday. And it was pretty ironic that this is a scaling platform and it couldn't handle its airdrop very well. Alex, what was the story?
Yeah. So the token went live yesterday morning, and about 600,000, a little more than 600,000 wallets were eligible for the airdrop. Everybody wanted to quickly get in, get their tokens. Some people wanted to sell it as quickly as they could so they could cash out. And Arbitrum struggled to handle that flood of people early Thursday. The website that you had to go to claim tokens crashed for a little bit. People that I spoke to were saying that they had trouble just like making the claim or selling their ARB tokens, that not all of their transactions were going through earlier in the day. The transaction fees on Ethereum and on its rollups like Arbitrum, they fluctuate based on how much network activity there is. And so, part of the point of a rollup like Arbitrum is not only to do things more quickly than Ethereum can, but to also do them more affordably. So where a transaction on Ethereum might typically cost like $1 or $2 for the simple stuff, on Arbitrum, it's like fractions of that. It's measured in cents, not dollars. Yesterday morning, that fee on Arbitrum went as high as $3. It was actually more than it was on Ethereum briefly. So, it's just like you said, it's ironic. The whole point is to like those are the problems that you have on Ethereum. This like Arbitrum is there to solve this. And it's not the first time this has happened, right? Like Arbitrum had a rewards program last year where it was trying to encourage people to use its network, and in exchange for using it, they were rewarded with NFTs, if I'm not mistaken, and that was too successful. Too many people tried to use Arbitrum. That also sent gas fees way up. I think also in that case briefly above those on Ethereum, and they canceled the program because they're like, okay, it's like breaking our blockchain. Now, the problems were short-lived, I should say. After like maybe 2 hours yesterday, the fees started to come back down. Everything started to pick up. And by the latter half of the day, that was kind of behind Arbitrum. But nevertheless, it just shows that like, Ethereum has its limit. The scaling solutions also have their limit, and it's not all that hard to hit that limit today.
Yeah, I mean, Arbitrum usually averages what? These days, what, 1 million transactions or so before the airdrop? So it's not geared, I don't think, for 600,000 people to hit it at the same time. Especially like RPCs went down, the site went down, even Arbiscan went down for a bit because, DJs can't wait. We need our free tokens. And it took me about 25, 30 attempts before I could claim, because I was in a rush because I wanted to LP right away to collect fees, right? And the Uniswap pools were just printing right out of the gate. I think the APR must have been north of 10,000, at least in the first hour or so. It's come off now a bit. I think this morning I'm getting maybe 3,000, 2,500 or so, but still good.
Jesus. Did you select a certain range?
Yeah, and luckily enough, prices stayed in that range pretty much since I opened the position. So it's been great.
Yeah.
And about, I think, more than 80% have claimed now. So it's like traffic congestion, everything's back to normal. The network's working fine. Like Alex said, after the first couple of hours, things started to calm down, and everything was smooth again. And it's actually a quite a nice experience to transact on Arbitrum versus mainnet. Your transaction actually finalized, or you get a confirmation immediately in under a second, right? Not like on ETH where you're waiting. Okay, am I going to get into this block? Wait 15 seconds. That's gone. All right. Am I going to get into the next block? So yeah, it's a lot better in terms of user experience, I'd say. So hopefully all the scaling solutions that come out, whether it's ZK Sync that just launched today, right? The mainnet. Or all the other ZK EVMs that are coming up. We have Polygon on the 27th. And I mean, there are a bunch of teams working on it, right? So hopefully this means that, I mean, the majority of DeFi TVL is still on Ethereum, right? So it'll be interesting to see if a lot of it moves to these layer 2s once they get more established and people are more comfortable using them in terms of security and decentralization or whatever, right?
Cami, you're muted.
We've talked about this layer 2 race for dominance, and now optimistic rollups like Arbitrum and Optimism are getting even more competition with the CK rollups coming to mainnet with CK Sync today. So definitely interesting to see. I really hope that when these networks are congested, it's because of actual activity, like people doing stuff and not wanting to claim airdrops. That's just my hope for crypto. But yeah, I think we should start wrapping up. Like Safe TM said in the comments, what a week. We Coinbase was the biggest headline, but we had plenty of other regulatory news. The Fed rate decision, Arbitrum airdrop, CK Sync launching in mainnet. We also have other kind of smaller tech updates. Uniswap launched on Avalanche. There's this decentralized RPC called DRPC that launched. Polygon and Immutable teamed up on a gaming-focused CK EVM. And yeah, those are just some of the headlines that we covered here. So that's it for today. Join us next week for another weekly recap. Bye, everyone.
See you guys.